Welcome back to TechKidFX for another Polygon Matic price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Polygon Matic chart, which at the time of this recording has lost the 20-day MA and it's now acting as resistance. We have also lost a significant high that we made at around the $1.3 mark, and at the time of this recording we have also continued to trade within this ascending channel that we have right here that could possibly give us a breakout to the upper side to fully maximize our target areas to the upside in the formation of this wave 3. And Polygon Matic has also continued to obey the Elliot wave structures, where I still believe that whatever we are seeing at the moment is a move to the upside in the formation of this wave 3. And before I give you my next price targets here on the Polygon Matic chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that Polygon Matic, after making its low at around the $0.74 mark, we started a very nice bounce to the upside, obeying the Elliot wave structures, where you can see that the high that we made at around the $1.05 mark is what I'm terming as the high for that first wave to the upside. And after seeing the high for that wave 1, we started a corrective structure in the formation of this wave 2, which retraced back to the area between the fib level 0.382 and the fib level 0.5. And after seeing the low for that second wave, we started another bounce to the upside, which is right here in the formation of this wave 3, and sketching out a minimum target area to the upside in the formation of this wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.4284 mark, and that is the minimum that I'm expecting that wave 3 to the upside to do before we can expect a wave 4 and then push even higher in the formation of that wave 5. And since we have continued to hold above a support zone at around the $1.17 mark, we have also continued holding within this channel, which is right here on the lower side. Then there are chances that we might see a bit of a bounce to the upside, get above the 20-day MA here on the 4-hour chart, and once that happens, then I'll be expecting Polygon Matic to continue pushing even higher, also manage to break above our significant high at around the $1.3 mark. And once you see a break above the 20-day MA here on the 4-hour chart, and also a break above our significant high, then there are chances that Polygon Matic might continue pushing even higher to the upper side of the channel. And once that happens, I'll be expecting to see a breakout of the channel to the upper side, and once the breakout is in, I'll be expecting to see a retest, and once the retest is in and a success, then we can fully maximize our target areas to the upside in the formation of that wave 3 at around the $1.42 mark. And once that wave 3 plays out, then I'll be expecting a bit of a corrective structure in the formation of that wave 4 before we continue pushing even higher in the formation of this wave 5. And once this Elliot wave structure that I have right here in yellow plays out and we see the formation of this wave 5, then I believe Polygon Matic will be completing an even larger Elliot wave count to the upside, which is giving me the long-term scenarios that I'm expecting to play out. So zooming out over here, you can see that after making our low at around the $0.32 mark, we started a very nice bounce to the upside, obeying the Elliot wave structures, where you can see that I have this Elliot wave structure in yellow, having the wave 5 making its peak at around the $1.3 mark, and also completing a larger Elliot wave count 1 to the upside. And after seeing the formation of a larger Elliot wave count 1, whatever we expect next is a corrective structure in the formation of a larger Elliot wave count 2, where we also expected to see an ABC corrective structure, fully maximizing the formation of that second wave. And we have seen the wave C over here giving us a low at around the $0.74 mark before we started this bounce to the upside in what I'm terming as the formation of this wave 3, which is an impulsive wave. And because of its impulsive nature, I'm also expecting to see a 5-wave structure in formation, having the wave 5 that is of this Elliot wave structure right here in yellow, fully maximizing our target areas to the upside in the formation of that wave 3, and giving you a target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $2.3169 mark, and that is the minimum that I'm expecting that wave 3 to the upside to do. And for us to have enough confirmation that we are back into the formation of that wave 3, I'm expecting a break above the $1.3 mark, which is the significant high that we made in the formation of these larger Elliott wave count 1. A break above that, and if we continue holding above that, then that will be enough confirmation that whatever we are seeing over here is the bounce to the upside in the formation of this wave 3 to fully maximize our target areas. And also taking a look at the indicators to see what movements will be supported. On the RSI, we are trading at around the 48 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 3. Also taking a look at the MACD, we have been able to print a bearish cross, and that supports a bit of a short-term bearish movements here on the chart. And if I get back to the chart once more, we also need to be prepared for a worst case scenario that can play out in case we see a breakout out of the channel to the lower side. So we can expect also a breakout to the lower side of the channel on the worst case scenario. And in case such a move plays out, then I'll be watching the next key area of support at around the $1.17 mark. And in case we lose that key area of support, then I'll be expecting to see a retest of that key area of support. And once the retest is in, then we can get back to the next key area of support at around the $1.05 mark. So we can have that in mind on the worst case scenario in case we see a breakout out of the channel to the lower side. So let's be patient and see how that plays out, and I'll be keeping you updated.